Hello, everyone. Good morning, good afternoon, and good evening to you. Trust you're doing very well out there. And in fact, I'm excited to be with you yet this morning as I welcome you to the second edition of the XAUUSD Live Technical Analysis session for this week. As usual, before we kickstart the session, let's confirm that we are good to go this morning. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. Please, I want you to understand that typing in hi in the comment section or a feedback sort of a thing is good for me to know that we are all on the same page. So thank you very much, guys, as I look forward to your feedbacks. What do we have here in the comment section? I can see a handful of comments from Nadezda. Okay, good morning to you, Nadezda. Rael, good morning to you. Annie149, Thiano Trader. I like that name. Michael, good morning to you. Hello, Carrie, good morning to you. Glad to have you around with us this morning. Anyone else here who is willing to give us a feedback in the comment section? So let's see. All right, so with this handful of feedback, let's see it as a confirmation that we are good to go this morning. So it's on this note, I welcome you all to yet another promising edition of the XAUUSD Live. My own name is Sheriff Daramola, and for the next 1 hour thereabout, I'm going to be your host as we shall be going into the charts to look at things from both technical and fundamental perspective with the utmost intent of strategically positioning ourselves for the next move. And in fact, so far this week, we have been monitoring about 4 financial instruments, which includes the USOILSPOT, the NASDAQ, that is the USTech100, the USDJPY, and of course the XAUUSD. And since the week has begun, we've had some interesting executions across the assets on our watch list. The USOILSPOT though did very well yesterday. We saw a price move significantly well. The NASDAQ too has done very well, fairly well, and the USDJPY is still struggling to gain some momentum, while the XAUUSD is doing very well at this point in time. So in the next couple of minutes, we will be diving into the charts to see how we can manage the existing position, and of course using the historical data we can find on the chart to position ourselves for more trading opportunities today. And in fact, in preparation for today, I have done a comprehensive analysis on all of these assets this morning, and in fact I'm excited to share with you my ideas and what we will be using to guide our decisions today. So I encourage us all to stay tuned in so that you do not want to miss out on the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, who are wondering what is really going on here, well, as technical traders, we usually gather here on a daily basis in anticipation of the New York session. So we come here as a community to review and do follow-ups on our current trading positions in preparation of the New York session. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, our first ritual on a daily basis is to keep tabs with the fundamental factors, that is economic events that are likely going to be influencing the behavioral patterns in the market today. And of course, we usually focus on high impactful events, and based on the asset we are looking at for this week, we are focusing on both the United States and the Japanese economic features. Now, on Tuesday, March 26, which is today, we do not have any high impactful event to look out for, but instead, what I did here so that we can have a broader view into what is going on in the market is to include the mid-tier economic features. Now, after including the mid-tier economic features, we have a bunch of them that we will be looking out for today, especially from the United States. So on top of the list here is the durable goods order from the United States economy, which is coming up in about 2 hours from now. This data here is released by the U.S. Census Bureau, and it measures the cost of orders received by manufacturers for durable goods, which means goods planned to last for 3 years or more, such as motor vehicles and appliances. As we all know how this sector, that is the manufacturing sector, is sensitive to the U.S. economic situation, and if the final figures come in higher than expected, then we may likely be seeing a bullish traction in favor of the US dollar. And if the figures comes in or just as expected or below expectation, then we may likely be seeing some negative traction against the dollar. Now, if we look at the previous data here compared to what economists are projecting will come out today, you will see that the projection is quite higher than the previous month figures, and this for me is a signal that we may likely be seeing some expansion in the manufacturing sector. So we look forward to some positive news today. So let's see what will actually happen. Will it come in just as expected, below expectations, or even beyond expectations? Then in about 30 minutes after the durable goods order, we will be looking at the housing price index, which is an index released by the Federal Housing Finance Agency, and of course it provides an estimated value of housing market conditions. And we all know how the housing sector is considered to be a sensitive factor to the US economy. So what this simply means is that if we can see an expansion in the sector, like a higher reading compared to what majority are looking forward to, or even beyond the previous month, we are likely going to be seeing some positive traction in favor of the US dollar. And if you remember, last week the data coming in from the housing sectors were quite impressive, and for yesterday we didn't see something that significant from the new home sales change, as we saw a contraction, a deficit of 0.3%. So looking at the housing price index today, we do not have any consensus yet, but the data that came in last month was about 0.1%. So we want to see if there is recent developments, recent positivity in that sector today. So we look forward to the timing on that one. Then finally today we are going to be looking at the consumer confidence. It's a survey that is expected to recover modestly in March after the first slide in 4 months. So we will be looking forward to this event, which is usually released by the conference board, and it's a survey gauging sentiment among consumers in the United States, and of course it will be reflecting prevailing business conditions and how willing consumers are trusting the economy by buying, by increasing their purchasing power. So this data here will give us a picture of whether or not consumers are willing to spend money or not. So we look forward to see what the data will be. It is projected to come in about 5 hours from now. So let's mark out these timings on our chart, and obviously we do know that the anticipation of this event as a way of influencing the way market participants will be behaving before the event happens. So due to this, we would like to mark out the timing and of course go back into the chart to look out for patterns and structures that we will be using to guide our decisions for today. So stay tuned in so that you do not miss out on what we will be deliberating on today. So as usual, the first asset we are going to be taking on this morning is going to be the US All Spot. Now on the US All Spot so far this week, we've done fairly well as we had the privilege of capitalizing on a buy opportunity yesterday after price action did break out and retested both our key level and the resistance line of that range bound structure we identified at the beginning of the week. Now, for the sake of clarity and educational purposes, those who missed out from our earlier session, that is yesterday's session, let's run through what really happened at the beginning of the week that led to the decision of buying this asset. So right here at the beginning of the week, remember we had our key level, which was situated at the $81 area, and this level here, or this zone, let me put it better that way, has played a significant role in determining the direction of price action in the last couple of weeks. Now let's scale back up into the 4 hours time frame so we can see what I am saying here. Now right here on the 4 hours time frame, after considering the character of price action since the beginning of this month, we saw how the market has shown some resilience as price action had consistently found higher highs and higher lows in this market. And after connecting this series of higher lows, we have a couple of ascending trend line here, where I have this temporary trend line up here and the major ascending trend line right here. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we want to continue to look out for patterns and structures that support the idea of buying that asset. Now zooming into the current structure and looking at what has been going on here in the last couple of weeks, it's evident that despite price action finding a new high at the $83 area, we have seen a little bit of consolidation phase as price action has been confined within the $83 area and of course the $80.50 level. So with this in mind and to position ourselves for the next move, we were able to project a key level around the $81 level, which obviously had been a major determinant of price action since the second week of this month. Now, if you look at the structure closely, you will see that during the second week of this month, this $81 level was serving as a strong selling niche before it was broken to the upside during the third week of this month. And since then, for about a week, price action stayed above the structure before last week's trading session saw price break down this particular area and making it a strong resistance level since it broke down the structure last week. Now you'll see how crucial the $81 level has been, how it has both played resistance at some point and at the same time played support at some particular point. Now, as we prepared for the new week, after looking at the structure, we begin to notice that despite the strong bearish momentum we saw following the testing of that new high at the $83 area, we saw how it has become difficult throughout last week's trading session for sellers to continue that downtrend, and this obviously resulted into some series of higher lows, giving us an insight into the possibility of a reversal setup in this market. So with the situation here, we were looking at a neckline lining up with that key level, where the breakout of that key level and the neckline here will validate the potency of that reversal pattern. So with this in mind, we were actually looking to see how the market will react to its key level on our lower time frame. So when we scaled down into the lower time frame yesterday, this was what we saw here. So we saw a beautiful range bound structure where price action was confined within the $81.13 level and the $80.70 level, just oscillating right around our key level to emphasize the prevailing uncertainty in the market at that point in time. And usually whenever we have a range bound structure like this, we exercise patience waiting for price action to either break out of the resistance line of that range to give us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. So with the situation we had here yesterday, we were looking at this was where we were during our live session. We were somewhere around the entry point here, and I was of the opinion that we are going to be buying at the breakout of both the resistance line at the $81.13 and of course the $81 area. And we did talk about adding more buy positions if price action goes ahead to break out of the $81.70 level, hereby giving us about 3 buy position triggered during yesterday's trading session. And at the end of the day, we were able to scoop in some significant amount of profit. Right here was about over 120 pips on that one. The second position moved about 115 pips thereabout, while the third position moved about 60 pips. And of course, you know how we do it in this community. When price moves significantly in our favor, you move your stop losses to secure your positions. And if you had done that, you must have been taken out of this position with a reasonable amount of profit. And congratulations to everyone who are taking advantage of this opportunity. Now, as it is right now, as we prepare for the New York session today, what is going to be our plans? Well, for those of us who still have a buy position running at this point, I will be suggesting that all stop losses to be moved to somewhere around that $81.50 level. Let's secure this current position as we begin to see price dip at the beginning of the Asian session to incite some bearish pressure on prices of the US oil. So kindly move all stop losses if you still have a buy position running at this point. Now, there are various factors behind the scenes which has been driving the character of market participants in this environment since the week began, from the growing tensions in the Middle East along increased attacks on energy facilities in Russia has sparked concerns about global oil supplies, potentially pushing oil prices to find new highs. And as a result of this, as I think that the path of least resistance for oil is still looking very bullish, and especially after citing the strong impulsive move to the upside. And in that regard, I'm of the opinion that this old bearish momentum we are noticing on the chart right now may be as a result of some short-term trading opportunities, which may result in the emergence of a retracement phase in this market. Now, the question as we head into the New York session is, how far will this retracement phase go before the next uptrend move will happen in this market? Now, in that regard, what I have done here is to see if the market is likely going to come back and retest this zone between the $81.13 level and the $81 area, where I have indicated here on the chart. We will be looking out for a reversal pattern to continue the uptrend move. So it could come in the form of a double bottom structure, head and shoulder pattern. But as soon as we identify a reversal pattern, we wait for the breakout of the neckline, retest of structure, and then we can join the uptrend move. So that is one way we are going to be looking at this uptrend situation. And another reason why I have suggested that price may want to continue to climb and find new highs is the expectation of interest rate cuts by the Federal Reserve this year, which could further support oil prices. Remember, lower interest rates typically stimulate economic activity, leading to increased demand for oil commodities. Now, the question now is what path will price action take before it continues the uptrend? So let's see if the market will come back and retest that $81 and $81.13 area where we said we shall be looking out for reversal patterns to continue the uptrend, or how we going to see price action break out and retest this newly identified descending trend line on the 1 hour time frame. So after considering this retracement phase, I have a beautiful descending trend line to guide our decision. So if price action breaks out the structure, retest it, then the floating of price action above the structure will be a very good idea to continue the uptrend move, and of course looking out to add more buy positions at the breakout of the highest point for this week, which is at the $82.25 level. So this is how we are going to be managing a bullish traction today on this asset. So let's see how the market is going to react to this confluence around the trend line and the $81.70 level. So if selling pressure persists below the descending trend line, then we shall be looking at how price will react to the zone, giving us a reversal pattern to continue the uptrend move. But if that is not the case and price breaks out, retests the trend line, then we are good to join the uptrend move. However, in as much as we are looking out for selling opportunities, what are the chances that sellers may come into this market? Well, to sell this market, I would like to see price action drop below the $81 area, retest it, and then this will give us a good confirmation to join a decline. And if we are joining a decline, please note that we had this ascending trend line which we marked out on our chart on the 4 hours time frame, which we want to see as soon as price gets there. Move all stop losses on the sell position, secure the position while we wait to see if price will break down and retest the structure to welcome more selling opportunities. And if the opposite happens, like a double bottom structure right above here, then this will be welcoming an uptrend continuation. So it's very, very important for us to mark out these levels and trend lines on our chart, as we will be using them to guide our trading decisions for today. So this is my simple view on the US All Spot today. So let's see how far will this bearish momentum go. In the meantime, we are calling it a retracement phase before the next uptrend will happen. So mark out this level, as we will be using it to navigate this current market dynamics today. If you have any questions whatsoever as regards to the explanations I've made, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. Stay tuned in, guys. All right. So, in the absence of no questions, I will take this as a confirmation that we are all on the same page. So, in that regard, we shall be moving on to the next instrument on our watch list. Stay tuned. So the next instrument we are looking at today is going to be the USTech100, popularly known as the Nasdaq. And so far, in this week, we've had some interesting situations in the market where we have had roller coasters of sell, and then in the last recent times, we've had buying positions too as well, giving us some profit on this asset. So for educational purposes and the sake of those who missed out on our session yesterday, let's run through what really happened in this particular market. So as at yesterday's live session, we were looking at the higher time frame where we wanted to have an holistic perspective into what is going on in this market. And after taking all of this into consideration, especially since the month of October of last year, we saw that the market has been very bullish, and in fact we have an ascending trend line to emphasize the strength of the buyers at this point in time. However, despite the strong bullish momentum in this market, we noticed how buyers have been finding it difficult to break through that area around the 18,250, 18,200 zone. Hence, we were using that area as our key level for this week, where we were looking at a breakout retest of the structure to give us an opportunity to continue the uptrend. But if price breaks down and selling pressure persists in such a way that it breaks down this ascending trend line, then we were saying that we will be selling the USTech100. Now, after identifying the structure on the daily time frame, we went further into the 4 hours time frame to have a pattern to guide our decisions for this week. So here we saw this range bound structure between the 18,450 and the 18,250, where we were saying here that it has the potency, or it has the potential of transitioning into either a reversal setup or an uptrend continuation setup. So we were looking at reversal patterns at the breakdown of the structure to the downside, or a continuation to the upside at the breakout of the 18,450. So right here on the 1 hour time frame, after monitoring how participant has been behaving since the new week began, we saw this range bound structure at the beginning of the week where price action was confined within the 18,365 and the 18,320, where I did tell us yesterday that the breakdown triggered my first sell position for the week, and that if price comes back to the entry point, we want to be, that is for those who had missed out on that opportunity, that we want to be continuing the downtrend if price comes back into that area. And of course, we saw price come back. We saw the sell limit triggered at this point. But unfortunately, we saw that the momentum wasn't that strong enough, as price moved about 45 pips before the bullish traction continued in this market. And for those of us who capitalized on that one, and if you had moved your stop losses, well, you must have been taken out with a worst case scenario, break even. But if you haven't, you must have been taken out in a loss on that position. And in following up with this idea of selling this asset, we had this descending trend line marked out after connecting the series of lower highs since last week Thursday. And one of the conditions we said here yesterday that will make us consider buying this asset is for this descending trend line to be broken to the upside. And lo and behold, we saw what happened here. Price broke out of the descending trend line, broke out of this entry point at the 18,320, triggered the position, We had more at the breakout of the 18,350 and of course the 18,365. So at this point in time, you should be having a minimum of 2 to 3 positions running in profit on the buy setup we identified here yesterday. And for those who capitalized on this opportunity, well done and kudos to you. So as it is right now, price had moved significantly well, and I will be suggesting that it is high time we moved our stop losses to secure the current buy position, and anywhere right around that key level at the 18,350 or below it, let's give enough breathing space for price action to move around. It's appropriate for us to move all stop losses too, while we want to see how far this bullish momentum is going to go. So with a well-secured position right now, how do we intend to continue the trend? Well, everything is looking very bullish right now. Look at what has happened here. The week started on a bearish note, as we saw here. But as soon as price tested at 18,200, we saw this sharp rejection, giving us a hammer candle, which theoretically reveals that buyers are still strong in this market, and this has resulted into price action breaking out of that trend line, which gives us what looks like a reversal pattern sort of a thing, where the neckline lines up with this descending trend line. So everything is looking bullish at this point. The current structure is supporting the bullish idea, so we shall continue to maintain an uptrend situation in this market. And if price action continues to climb and find new highs, then we have another high here, that is the 18,390 zone. So we want to be marking that level out. This is the next level that we want to see price break out of to welcome more buy position. So we mark out this level here, 18,390. Mark out this level, and then let's see how far if it's going to break out of that structure. Remember, this level here had been a strong selling niche in the past, so let's see if the market will break it out. If it breaks out retest, we are looking out to add more buy position. However, if selling pressure persists here, just like it did in the past around this level, then we might be seeing the intention of coming back to retest this descending trend line that was broken earlier today to incite an uptrend continuation. So if selling pressure persists there, we are looking at that possibility of a retest of the trend line in an attempt to continue the uptrend. If that happens, then we just look out for reversal patterns around this area, signs that buyers are building up momentum and sellers are gradually losing that steam to give us a sign to join an uptrend move from there. However, in as much as we're looking out for selling up buying opportunities at this juncture, the only condition that will make me want to be selling the USTech100 today is for price to drop back below that descending trend line, where a retest of structure will be a beautiful opportunity to join the decline. And in fact, if price action breaks below that descending trend line, price will also have broken down that ascending trend line we spotted here on the 4 hours time frame, hereby emphasizing the strength of the sellers at that confluence. So let's see how the market will play out. I'm not selling unless this descending trend line is broken, and currently we have a buy position which we have secured right now, and we're looking out for more opportunities at the breakout of the 18,390 level. So this is my simple view on the USTech100 for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions or you need any form of clarifications, feel free to let me know in the comment section. So in that regard, I will be taking some 10-15 seconds off to see if there are any questions before we move on to the next financial instrument on our watch list for today. Stay tuned in. Skyburn. Hello, Daniela. Good morning to you guys. Trust you're doing very well. All right. So, in the absence of no questions, we are good to go. So, let's move on to the next asset on our watch list. So the next asset we are looking at this morning is going to be the USDJPY, an asset which we just newly introduced after we stopped trading it about 4 or 5 weeks ago, and I saw some interesting setup ahead of this week, and I tried to introduce it into our watch list again. So yesterday we had this simple trading setup right here on the 4 hours time frame, where we saw price action confined within the 151.430 level and the 151.050 area to emphasize the prevailing uncertainty in the market at that point in time. And due to the range bound structure and the fact that price action was trading above that ascending trend line we identified on the higher time frame, let me show you quickly. So let's go back into the 4 hours time frame. Remember, we had this ascending trend line after connecting the series of higher lows in the last couple of weeks, and we saw here that the ascending trend line appears to have been broken to the downside. But yesterday price was still trading above that ascending trend line, and what we were looking out for are buying opportunities, especially at the breakout of the resistant line of that range at the 151.430 level. And as you will see, we had a buy stop order above the structure. We had buy position triggered, but unfortunately the bullish traction did not last long, as we saw price move about 10 pips thereabout before it dropped below our entry point, and has since then been trading within the stop loss zone. So at this point we still have the buy position active, but it is currently running in a loss of about, how many pips is that? We're currently running in a loss of about 13 pips thereabout. So it is very likely that this buy position is going to fail, and it's likely going to hit our stop losses, which is well below our key level at the 151.200 area. So things are looking very bearish this morning as we begin to see the Japanese yen struggle to gain significant momentum, especially during the Asian session today. And in fact, I think that the speculation about intervention by the Japanese authority to support the yen is contributing to its stability. And this, alongside ongoing geopolitical risks in Eastern Europe and the Middle East, which appears to be bolstering demand for this safe haven currency at this point. However, it is important that we note that the yen's upward potential is limited due to the uncertainty surrounding the Bank of Japan's future policy decisions and the prevailing bullish sentiment in the equity market. Additionally, the US dollar may face pressure from the Federal Reserve's anticipated less restrictive monetary policy, which could further bolster more demand for the Japanese yen. Now, considering this recent development, as market participants await US economic data today, such as the durable goods order, the Conference Board Consumer Confidence Index, and the Manufacturing Index for potential short-term opportunities, we'll continue to rely on the levels we identified yesterday as a yardstick to guide our trading decisions for today. Now, with the situation we have here, like I said earlier, our buy position is still active at this point. But one thing you will notice here is that as soon as price action tested this highest point for this week, which is at the 151.500, what a psychological level that is, we begin to notice bearish pressure resume around that area. Now, since then, price action has transitioned into a series of lower highs, further emphasizing the strength of the sellers at this point in time. And you know how we use our descending trend lines in this community. As long as price action remains below that descending trend line, we want to be looking out for patterns and structures that supports the idea of selling this asset. So with a series of lower highs here, I'm of the opinion that we might be seeing some bearish traction today, especially as the fear of an intervention from the Bank of Japan continues to get stronger by the day. So with that being said, here we are looking to sell below the key level. You know, of course, if price trades below our key level, we want to be looking out for selling opportunities, and this suits this descending trend line we have here. And if price continues to drop further, then a breakdown of the lowest point for this week, which is our support line at the 151.050 level, will welcome more selling opportunities for us today. So I encourage us all to mark out this level, the 151.200 and the 151.050 area, to give us opportunities to buy these assets today. However, we still cannot ignore the potentials that buyers can come in. Remember, we are looking at the uncertainty surrounding the Bank of Japan's future policy decisions, which is not yet concrete at this point, and this could still empower the buying strength. So if that is going to be the case, the conditions that will make us buy this asset still lies above this descending trend line. So that area around the 151.430 is still valid for more buying opportunities. So we could have a re-entry if we get taken out of this current buy position and looking out to add more positions at the breakout of the 151.625 and the 151.780 area. But things are looking very bearish at this point in time, so let's see how the market will play out. So I do encourage us all to mark out the trend line, most importantly this descending trend line on our chart, and of course the other levels at the 151.200 for selling opportunities and the 151.430 for buying opportunities today. So this is my simple view on the USDJPY for today, and if you have any questions whatsoever, feel free to let me know in the comment section below, and I'm here to be of help in that regard. So I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the final assets on our watch list for today. Stay tuned in, guys. Hello, Elmiosomi, I see you. I see you boldly. And I see you Bim Bim 140. Salam alaikum, everybody. I'm glad to have you around with us this morning. Trust you are doing very well, Bim Bim. All right, so in the absence of no questions, I guess we are all on the same page here, and I do hope you've marked out these levels and structures accordingly on your chart, as we will be needing them as a reference point to guide our decisions for today. So with that being said, let's move on to the final assets on our watch list. So the final asset we are looking at today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And so far this week we've done phenomenally well on this particular asset as we took advantage of that buy position at the breakout of that descending trend line and the 2169 level we identified during our live session yesterday. And in fact, congratulations to everyone who capitalized on this opportunity. Now let's quickly run through, for educational purposes and the sake of those who missed out on our session yesterday, what has really happened in this particular market. Now, during our live session yesterday, right here on the 1 hour time frame, we did acknowledge that price action may likely be going through the retracement of that impulsive move that followed the FOMC announcement last week. I think this is much more visible on the higher time frame. So let's run through the higher time frame quickly. So right here on the 4 hours time frame here, remember we acknowledged the breakout of this uptrend continuation pattern last week, which gave us about 900 pips from multiple buy entries. So remember, we joined this bullish move last week, and then we also joined this bearish move last week again, riding the momentum back into that demand zone between the 2160 and the 2145 level. Now, during our live session yesterday, I did mention that we may be seeing a situation where the uptrend continuation is mature after seeing price come back to retest the structure that was broken, and the appearance of higher lows here was a sign that buyers may likely be gaining momentum behind the scenes. And one of the things we did here yesterday was to position ourselves for an uptrend continuation. And if you remember vividly, I said here that the only condition that will make us sell this asset is for this demand zone trend line and that key level at the 2145 to be broken to the downside. And this was obvious, this never happened, further emphasizing the strength of the uptrend move. So as a result of this observation here, we had a structure identified here during our live session yesterday after citing this range bound structure. And I did tell us yesterday that okay, we were around this area during our analysis yesterday. We were around here. So immediately I saw the continued buy pressure around this area. As you will see, despite the strong bearish momentum from last week, sellers were finding it difficult to break through the $2,164.50 level. So immediately we saw this, I said that we may be getting ready for an uptrend continuation. That is, we might be seeing the culmination of that retracement move. So we identified this level at the $2,169 area. As we saw here, price did break out of that structure here to trigger the buy position. And in fact, if you had missed out on that opportunity, you will see the market coming back to retest the structure to continue that uptrend move. And remember, yesterday we had multiple levels marked out on our chart. As we said, we will be adding more positions at the breakout of the $2,178.50 level, the $2,185.50 area, and of course the breakout of this level had the $2,195. And as it seems right now, all buy positions are triggered, so you should be having a minimum of 4 buy positions running in profit. And what total do we have right now? So the first buy position is currently running with about 295 pips in profit, while the second one is running with about 200 pips, that's 450 pips thereabout. The third one is running with about 130, and the fourth one here is running with about 330 pips thereabout. So we are running into about 600 pips in profit on the XAUUSD. And once again, congratulations to everyone who are capitalized on this opportunity. Now, as it is right now, price action is moving significantly in our favor, and it is high time we want to be moving all our stop losses to secure the current buy position. And if you would ask me, anywhere around the 2,192 and the 2,190 area seems most appropriate to move all stop losses to, while we give enough breathing space for price action to move around. So with a well-secured position at this juncture, what is going to be our plans for today? How do we intend to capitalize on the next potential move? Will price continues to find new high, or are there chances that sellers may come in at any point in time? And if price wants to continue new highs, do we still have levels to guide more opportunities to maximize this potential move? So as it is right now, it is obvious that the US dollar continues to face bearish pressure amidst mixed market sentiments, with US Treasury bond yield struggling to sustain yesterday's upward movement. The prevailing bias appears to favor the buyers right now, especially with the Federal Reserve signaling a less restrictive policy in the future. And this, for me, may continue to serve as a tailwind for safe haven assets such as the gold. Moreover, geopolitical tensions suggest that the path of least resistance for gold remains tilted to the upside too. So you can see everything is screaming bullish for us. Even the fundamentals is supporting that idea. However, it is essential to acknowledge that we might be seeing the possibilities of extended sideways trading activities today, especially as market participants await key events on the US economic calendar. Though we have some mid-tier economic features coming up later today, but we still have some main event coming up much more later in the week, like the GDP data for Q4 from the United States and the core personal consumption expenditure, which is an inflationary measure of the US economy, coming up on Friday. And of course, this may likely incite some indecision going into this market, as major key players might want to step aside, waiting for these announcements before making additional aggressive bet. So in that regard, I encourage everyone to secure this current buy position right now. So given this development, what are the things we want to be looking out for today? Well, I still think price may continue to climb and find new highs, and if it does, we do want to be on standby to capitalize on that move. So I will be including the 2,210 level. So I want to include the 2,210 level. I think I have two more levels here. So we have the 2,000, let's say 2,205, right? Let's see. Okay. Okay, 2,000. I think this is $2,202.50 level. Seems most appropriate here. So I encourage you to mark out this level on your chart right now. So $202.50 level. Then the highest level so far, the $2,009 area, which we will be looking to 2,209, right? I hope I'm correct on that one. Okay, so we have another level we are looking at to add more buy position if price action continues to find new highs here. So let's mark out this level so that we can maximize this bullish move all the way to the upside. So this is what we shall be looking at today. So I have a bullish bias ongoing. Let's see how far it's going to go. However, it is important to also note that this area between the 2,195 and the $2,209 area has been a strong selling niche in the past. Remember, we experienced this between Thursday, on Thursday's trading session, we saw this impulsive bearish leg to the downside. And so we may likely see that same situation happen around this area. Now, if that situation happens, how are we going to be joining a sell? Well, for me, I wouldn't be joining a sell at that point. But if you are a short-term trader, a day trader, or one who feels comfortable taking counter trend opportunities, you might be looking at the breakdown retest of the 2,195 area to sell, and that could be a retracement of this impulsive move that we saw here in the last couple of hours. So if price could break down, retest the structure, where is my arrow? Okay, break down, retest with continuous selling pressure below the structure, you can be looking at selling back into the $2,178.50 level, dovetailing to about 170 pips thereabouts. And the reason why I'm using the $2,178.50 level is simply because this area is serving as the neckline of this reversal pattern that started this week. So we saw the breakout of the structure, so we may be seeing price come back to retest it in an attempt to continue the uptrend. And in fact, if it breaks it down, a retest of structure could welcome more selling opportunities. Now, to further help us to feel comfortable in our current positions, I'm looking at adding an ascending trend line for us. So we're going to give this a blue color. So we have it at blue color here. So you can see how it shares a confluence with that 2,178. So if it comes back into that area, we may be seeing a reversal setup to continue the uptrend up to the upside. But if price breaks down this trend line and the $2,178.50 level, we may be seeing a crash to the downside. So I encourage us all to mark out these levels. Let's see how the market is going to play out in the next couple of hours on this one. And please, if you still have your buy position running, kindly secure them, and let's see how the market will play out. So this is my simple view on the XAUUSD for today. I do hope I made myself very clear. But if you have any questions whatsoever, feel free to let me know in the comment section. I'm here and willing to be of help in that regard. So I will take the next 5-10 seconds off to see if there are any questions whatsoever before we start rounding off on today's technical analysis session. All right. So what do we have here? I can see Chris Jim. Good morning. Ram Nivas. Good morning to you. And I can see you, Lako. How are you doing, Lako? You said here, any crypto, sir? No, we do not have crypto today. No one dropped any crypto asset yesterday, which was Monday, where we have the privilege of dropping in the comment section any assets we want us to look at for the week. So if you want us to trade cryptocurrencies, feel free on the next Monday session, drop it in the comment section, and I will try to incorporate it into our plans for the week. All right, so in the absence of no further questions, I guess we have come to the end of today's technical analysis session. and it has been a wonderful moment with you guys. I really love the energy in the comment section today. Thank you very much for your positivity. And so far today, we were able to attend to all of the 4 financial instruments we're monitoring for this week, which includes the USOILSPOT, the USTech100, popularly known as the NASDAQ, the USDJPY, which we newly introduced into our watch list after 4 weeks of absence on that asset. And then finally, my favorite asset amongst them all, the XAUUSD, popularly known as the gold spot. And of course, we were able to identify simple trading setups to guide our trading decisions today after understanding the current market dynamics using the fundamental factors and the technical aspect to make a well-informed trading decisions. So I wish us all the best of luck today. I do hope we were able to mark out all the levels and structures we identified during the course of the session. If you have done so, well done and kudos to you. So all we need to do now is exercise patience and allow the structures to mature. For those of you who joined us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach, which eventually will help you to have some confidence in your independent trading decisions. So it's on this note I want to wish us all the best of luck. In fact, I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and of course as we prepare for the midweek trading session. So I see you, Lako NAS 100. We already took that already. So I hope to see you tomorrow so that you don't miss out on what we will be talking about tomorrow on that one. So I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.